traders, this is our weekly gold review. My name is Angelos Zitis, and we start with this week's title being Can the Bears Avenge and Conquer Further? Gold maintained its downward momentum in the past sessions, with analysts making a case for some risk sentiment being removed from the financial markets. This idea was based on positive financial releases from different parts of the world. Yet, other factors may have also weighed on the precious metals price, as the current correction started to form prior to the release of some positive economic data in the previous days. And so the investigation begins. Our first point is financial instruments entering specific cycles. We make a start with our own opinion, which is based on what gold's movement has shown until now. You may have heard many analysts making the case for various financial instruments entering specific cycles. In the case of gold, the shiny metal has risen since late May 2019, breaking consecutive round number levels like 1300, 1400, and 1500, which is an indication that the upward part of the cycle may have been fulfilled. Now, of course, the momentum was backed by fundamental news that indicated the financial markets were under strong ambiguity. However, obviously a very strong bullish momentum by traders with plenty of equity was performed, and the majority of other gold traders joined the trend, which boosted the momentum even higher. It is very possible that traders or financial institutions that had long positions on gold have booked massive profits through the period of 4 months, where gold ascended over $250 in value. Traders, having reached the top of a bull run at around $1,555, a lot of take profit may have been triggered in order to lock in the gains and simply move on. We base this idea on the fact that gold performed its largest sell-off in multiple months on the 5th of September, where the metals price dropped by $47 of value. Even though it did correct higher on the same day, the bearish momentum was very strong, especially in the European afternoon. Also, the fact that the selling momentum continues until today tells us big volumes of long positions are being removed from the market and sellers are entering, which brings us back to the cycle we referred to at the start. We do not cross out the possibility of gold moving higher, but we do have evidence that the strong correction the market may have been waiting on has appeared. Make no mistake, even though in the past days and today we have positive financial data from the UK, Germany, and China, the fundamental drivers of the financial markets, the ones that represent great obstacles but also opportunities, are still in place. We are specifically referring to the US-Sino trade dispute, the Federal Reserve cutting rates, and even Brexit, which are still in place and may follow us in the later months. Gold traders should be aware that the situation with the fundamental news is rather fixed or static for the time being, so major moves on gold should be made cautiously. And for this reason, any trades open should be monitored constantly. Our third point is government debt yields. On a separate front, a fact that supports the recent downtrend gold has formed are the US government debt yields, which climbed higher on Monday. Both the 10-year and 30-year treasuries moved higher in the yesterday and the day before sessions, so some risk relief has been realized. Also, there seems to be a simultaneous rise between US and European bonds, as they too moved higher in the previous sessions, doubling the temporary anti-risk sentiment. As a conclusion, as some improvement has been observed on financial releases around the world and things may seem more clear at the moment, we would have to turn our focus to specific technical aspects of gold pricing that may be indicators of further price action. For this week's technical analysis, we have made some changes in an attempt to be clearer with our description of the instrument's course. First, this is the 4-hour chart instead of the daily chart we displayed previously. Second, we added an extra support level that was not observed in previous reports. That's our R2 1515 resistance level that was added after the downward trend line formed in the previous days. As the precious metals price action is forming a downward trend line, we currently maintain a bearish outlook for gold's prices. However, in an upward momentum, we could see the precious metal approach our R1 1500 resistance level. If this level is breached, then the next possible stop could be near the 1515 R2 resistance level. If gold surpasses our R2, then it would be an indication that the bulls have a clear edge again. And so the next stop could be at the R3 1530 resistance line in the opposite direction. And if the selling momentum persists today, we may see a drop near our S1 1485 support level, with the next possible stop below that being at the S2 1470 support barrier. Moving below the S2 would indicate a strong bearish momentum, and the next stop could be at the S3 1450 support barrier. Now the RSI indicator below our chart is currently running near the 30 level, indicating a heavy bearish momentum that could be ready to reverse at some point. If you heard something useful in this report, then make sure you apply it to your trading. That's the whole point. From everyone here in IronFX, we wish to you solid trading, and we'll see you soon.